AMD $2 a share in 2015. Most people laughed at it. A decade later, nearly 10,000% returns, $10,000 became close to $1 million. Monster Beverage, under $1 in 2004, $1,000 in, almost $300,000 out. Neither was a startup. Both had real products, real customers, real businesses. They just weren't obvious yet. That's exactly what we're hunting today. 5 stocks under $5 with real businesses, real momentum, and the potential to be the next generational compounder. Let's get into it. Quick disclaimer, this is not financial advice. Always do your own research. Let's start with the most controversial name on this list, because that's usually where the opportunity hides. The CEO is Kevin McAleenan, former acting secretary of Homeland Security, former commissioner of U.S. Customs and Border Protection. This man didn't just know the government AI space, he built relationships. He built relationships with the people who signed the checks for 20 years. You cannot replicate that. Now here's what Big Bear actually does. They build AI for national security, defense, border security, and intelligence. And they just made 2 moves that completely changed the picture. Move 1, they acquired AskSage, a secure generative AI platform with FedRAMP's highest clearance level. We're talking 16,000 government teams and 100,000 Department of Defense users. Most AI companies can't even compete for these contracts. Big Bear is ready. Move 2, Veriscan, their biometric platform, is already live at major US airports right now. And here's the catalyst nobody's talking about. The One Big Beautiful Bill earmarks $673 million specifically for biometric ID systems. The numbers: 2025 revenue came in at $127.7 million. Full year guidance is $135 to $165 million. They have $431 million cash on hand, with a burn rate of only $46 million a year. That's nearly 10 years of runway. The bear case is real. Revenue was down year over year. There's an active class action lawsuit and a financial restatement. But if AskSage's revenue ramps and the federal contracts hit, this thing reprices fast. Analysts are sitting at a $5.30 average price target. Kraken builds underwater defense technology, sonar systems, subsea robots, unmanned underwater vehicles. And right now, navies are spending like crazy. Russia is targeting undersea cables, NATO is scrambling. The next major conflict may not be in the air or on the ground, it might be under the water. Kraken sits right in the middle. In March, they acquired the Covalia Group, owner of Sonardyne, one of the most respected names in subsea technology. This creates a genuinely global underwater defense company. Combined revenue of around $365 million with 24% EBITDA margins. Profitable. The numbers: $87 million in new orders already locked in for 2026. Pipeline above $2 billion Canadian dollars. 2026 guidance is $165 to $175 million. That's 65% revenue growth. Gross margins at 62%. The bear case: National Bank downgraded on valuation risk after the acquisition announcement, and integration risk is real. This one follows a pattern I love. A company in the middle of transforming. Hive started as a Bitcoin miner, and they're excellent at it. At 25 exahash per second, they run on renewable energy. Hydroelectric in Paraguay, geothermal in Iceland. That mining business alone is generating close to $400 million in revenue at 50% margins. This is a company making serious money today. But here's where it gets interesting. They're building out an AI compute arm, 6,000 next-gen GPUs coming online. Their Paraguay hydroelectric data center goes fully live in Q3. Projected operating margins on the HPC side, 80%. So think about what the market is currently pricing a Bitcoin miner. The AI compute build-out hasn't even been priced in yet. 7 analysts have a strong buy rating with a $5.80 price target, 36% upside. I think there's a lot more to go. Grab operates the super app across 8 Southeast Asian countries: food delivery, ride-hailing, and digital payments. The addressable market: 700 million people, most of whom are still in the early innings of digital finance. For the first time in the company's history, they turned a real GAAP profit, $268 million, first time ever. Revenue up 20% to $3.37 billion. Monthly users crossed 50 million for the first time. 2025 was the best year yet. Management clearly sees it too. They launched a $500 million share buyback. The CFO called the current stock price a clear dislocation. On top of that, they acquired Food Panda Taiwan for $600 million. They got it at a 37% discount. In April, they launched the first live commercial autonomous ride service in Singapore. Revenue generating autonomous rides happening right now. And their financial services loan portfolio is up 130% to $1.4 billion. Every part of this business is accelerating. Jessica Alba co-founded this company because she wanted cleaning products and diapers she could actually trust around her kids. Safe products, no harsh chemicals. That simple idea turned into a real business distributed through Target, Costco, and Amazon. Management made a deliberate decision, focus on where they actually win: wipes, personal care, and diapers. The business is getting leaner and more profitable. Q1 2026 hit a record 43.5% gross margin, zero long-term debt. That profile has acquisition target written all over it. Procter & Gamble, Unilever, Church & Dwight, any one of them would love a decade of brand trust in this space they'd never be able to build themselves. Acquisition scenario models from some analysts land between $18 and $22 per share. The stock is at $3.60. The bear case: revenues will look down as exits hit. The diaper segment is getting squeezed, but the setup is compelling. None of these five are perfect. Big Bear has a lawsuit, Kraken is pricey, Hive is Bitcoin tied, Grab missed guidance, Honest is shrinking on purpose. But that's exactly the point. AMD didn't look obvious at $2. Monster didn't look obvious at $1. The next generational compounder under $5 isn't going to come gift wrapped. We have to find it. Thanks for watching.